Get ready for the big revival. The real estate revival, that is. Now on 77 WABC, your New York weekend.
Get ready for the big revival.
It's Rand on Real Estate.
Look out!
With Greg Rand.
Welcome to the Big Real Estate Revival. This is Greg Rand, your host on 77 WABC and WABCRadio.com. We are excited to be here for the first Rand on Real Estate show of the big 2012 year. I'm here with Laura Smith, my producer. How are you?
Happy New Year.
Happy New Year. Great to be here. All right, so if you're a fan of this show, you know that we're all about entrepreneurship. During the Great Recession, we're all about helping you bulletproof your plans about how to build wealth in American real estate. We're all about pushing back against all the negativity that's out there, and we're all about taking your calls. So get online, give us a ring, 800-848-WABC. That's 800-848-9222, and ask me anything you want about real estate, any place in the country that you want. I love analyzing markets that are outside the New York area because I can do that and because it's fun, and I think it's teachable. We're going to talk about some of the new government interventions that are coming our way in the housing market, and I'll tell you why they make me nervous. And we're going to be talking about, let's see, we're going to start with my favorite segment and Laura's favorite segment, which is called Smart People Saying Dopey Things About Real Estate. And you know what? It happens every week. There's a lot of smart people saying a lot of dopey things, and there's a new round of media coverage out there that I want to bring to your attention because maybe you heard it, maybe it's affecting you, maybe you believe it, and I want to show you why I think it's wrong. And it comes from some recent studies that were done that highlighted the fact that home ownership rates are coming down. All right, they peaked up at about 69% of all U.S. households were homeowners at the very peak, and now it's down to something around 65%, which is actually historically still pretty normal. And we know the reasons for this. Okay, we know why how home ownership rates spiked. It had everything to do with the fact that lenders, starting with Fannie Mae and Freddie Mac, giving people no money down financing at whatever levels they wanted, and so that gave people fake blank checks in their pocket. We call it Fannie money. Funny money, get it, right? So Fannie money, driving prices up. People get into homes. They end up losing value. People are now getting out of those homes through either foreclosures or short sales, or people who want to buy a house just can't because the lending standards are too tight. All very explainable, all very temporary, but the result is a lot of new renters out there, which is great for investors. And normally you'd expect that a guy who's all about real estate investing would tell you how this is wonderful, because it is great for investors as rental rates get driven up and as new rental household demand skyrockets. But once again, the smart people out there are reading this trend in a short-term context, and they're now saying that, there was a headline that I saw recently, the American dream of owning a home? No, Mom and Dad, that was your dream, all right? And it was about how people in the Generation Y, the Echo Boomers, people in their 20s, no longer want to own homes. And so they read this decline of home ownership as something that's much more consequential, much more sort of central to the attitudes of people in this country now, that they've lost faith. They don't want to own a home. They want to be more mobile. And it's coming out in a lot of places. We have an audio clip here that I want to play you of Susie Orman. You guys know Susie Orman. She's the guru-ess of cut up your credit cards, live within your means. She has a new book that she's out promoting. And she's smart, but not about real estate. And so she said something. She's out there all over the press right now making the following statements. Let's go ahead and play that clip.
Here's the thing. Starting in 2008, America did change. Mm-hmm. America has gone from a country where your desire to own a home has now gone to a country whose desire to get out of the home that you own and rent an apartment is more prevalent than ever before.
Okay. So the numbers don't agree with Susie, okay? Susie's world are people that are in over their heads, and I understand that. She seems like a very nice person, by the way, a very caring person, and a very smart person, just not about this subject. You know, we coined the phrase, Laura, smart, what did we coin it? It was housing expertitis. Mm-hmm. A lot of people out there are armchair housing experts. They live in a house, so they think they know about the housing market, and usually they make the same mistake, and that is they look at things too short term. So what Susie is saying is making the statement that what used to be a desire among everybody to own a home, now everybody wants to rent. And the numbers, we're all focused over the last couple of years on people that did housing wrong, okay? bought with no money down, bought at the peak, lost value in the property, couldn't afford the mortgage, whatever. They made a mistake. They wanted to get out of the home, okay? That's still a very, very small minority of all the households out there, okay? There are, for example, many, many, many times more people that have houses that are paid off than there are people that are in foreclosure, okay? Many times. You never hear about those people anyplace except for Randon Real Estate, right? You never hear Susie talking about all the people that have their homes paid off. And so she and a lot of these other writers are looking at this now as this is a new attitudinal change across America where people don't want to own, they want to rent. And again, you'd think this is a good thing for if you're a landlord, if you're an investor, and it is. But I just want to correct the record. I mean, we don't see any evidence that people don't want to own homes. You go out and do a survey of people in their 20s, and they say things like, no, Dad, home ownership is your dream. But I actually had a conversation with one of the senior entrepreneurs in the real estate business, a guy named Dave Liniger. We're going to be interviewing him for next month's show, actually. He's the founder and chairman of RE/MAX Real Estate. So they're the biggest real estate company in the country. And he's the original founder from 40 years ago, still the chairman of the company. Really interesting guy, great sense of humor. And I asked him about this, and what he said was funny. He said, you can't ask somebody in their 20s what they're going to be thinking when they're in their 30s, right? Ask a 20-year-old who doesn't have any kids, who isn't married. Their motivation of where they want to live is can they walk to the bars and can they crawl home?
Yeah.
I mean, their motivations are totally different. And he makes a really good point. So, whenever you see people talking about this younger generation, it's usually people from an older generation who are writing about what the younger generation wants. And they always have they always cast the younger generation as being kind of smarmy. Like, if you don't text me, I don't want to talk to you. Like, I want to communicate with you the way I want to communicate. And the truth is, you know what? If you're applying for a job, you better communicate the way the person who's giving you the job, who's probably older than you, wants to communicate. But the point is, I mean, you think about when you're 20. When you call here, whatever you're calling about, I want to ask you about something that you thought was important when you were 20 years old that you realized by the time you were 35 or 40, you were off base. For example, what popped into my head was when I was 20, Laura, I was this close. My fingers are a half inch apart. I was this close to getting a tattoo of a Roadrunner on my arm. A Roadrunner.
Nice.
Okay? And the reason was I was a huge fan of the Plymouth Roadrunner, a really cool muscle car from the late 1960s. And I was sure that there was no chance that I would ever not be in love with Roadrunners. Thanks for the sound effect there. Yeah, so I didn't get it because my parents told me don't bother coming home if you do. And, of course, 15 years later, I'm really happy. I'm not 35 now, but by the time I was 35, I was real happy that I didn't have a Roadrunner on my arm. I kind of got into Porsches and Mercedes at that point. I'm back to the old Plymouths now again, but
what did you get? Did you ever get a tattoo?
I never got a tattoo.
Okay.
And I kind of missed my window, I think, now. It's a little bit too I'm past my prime when it comes to that. But that's just an illustration, okay? So don't believe it, okay? Don't let people get headlines and impact your understanding. I think your gut probably tells you that nothing's really changed from the standpoint of people wanting to own homes. Maybe they're more realistic about what they can afford. Maybe they're more nervous about taking the plunge. And all those things make sense. I think people are definitely different today than they were 5 years ago in terms of, ostentatious living was very in during the roaring 2000s. Austere living is very in now. But have faith, all right? The housing market is recovering. It's recovering slowly. It's going to recover. And we'll talk in the next market as to whether or not, the next segment as to whether the government's helping or hurting that. And we'll take your calls. So don't forget to give us a ring, 800-848-9222. I'm Greg Rand. This is Rand on Real Estate. Stay with us. Welcome back to Rand on Real Estate. I'm Greg Rand, your host on 77 WABC. Our number here is 800-848-9222. That's 800-848-WABC. We got some callers on hold, so I'm going to jump to them right now. How you doing, Eric from New Jersey? Thanks for coming on the show. What's on your mind?
Yeah, my pleasure. Glad that you could take the call. I run a real estate office in Burnsville, New Jersey, and with all of the press saying what they're saying, we had the best year since 2005.
You had your best year in 2011 that you've had since 2005. That's despite all the negativity out there. So what do you think? I mean, one of the things that I like to tell people about the New York area is that even though the same media shows up on every TV screen in the country, the national stats don't apply. And when they talk about crashing real estate markets, I'm guessing that Bernardsville didn't crash, right? I mean, you're part of the New York metro area, the greater New York metro area. How did your market perform, and how's the attitude of the people that are buying in there now?
We saw from the peak in 2005, we've seen a decline in single-family home prices of maybe 20 to 25%. We have the good fortune to be on the railroad line to New York, and that, of course, creates demand for our homes. Plus, we have terrific schools. The buyers that we're seeing today have realized that there's no place to put money except real estate right now. They've given up on the stock market, and they really just see the investment value of buying really good quality real estate in nice communities.
I'm glad you said that, because you know what? There is an attitude out there that I'm sure that you could validate, or if it's not in your market, let me know. But there's an attitude out there that real estate investor equals foreclosure vulture. Like there's the people have seen on late night cable too many times the guys that are selling the snake oil, get rich quick with no money down, buy and flip. And so after a while, people who are thinking about investing in real estate think that that's how you invest in real estate. You try to find a steal. You try to find a property that's dilapidated. And I actually had somebody, I won't say who it is because they would kill me, because I thought that it was an idiotic statement. They wanted to know what the best markets in the country were, and I told them what the best markets I liked the most. I like a lot of them, okay? But they wanted to know, no. The definition of best market was which ones had crashed the hardest, as if a market that was really getting hurt was the best one to buy in. And that's kind of a day trader's mentality in real estate. And what you just said, that it's high quality real estate. New Jersey is a blue chip state, okay, in terms of the way it's performed over the last 20 years. It's a blue chip state. Now, that means it's expensive, okay? It's like there are some people that want to buy stocks, if they're stock market players, they want to buy stocks that are 15 cents to $1 so they can triple their money. There are other people that want to buy GE, and they know they're not going to triple their money, but they want to protect their money. They want to see it grow. And that's kind of the way that I'd characterize New York area real estate. It's an expensive thing to buy into, but as you said, what's the one thing you told us about your town is that you're on the railroad line to Manhattan, okay? So it's all about jobs, financial stability, a diverse job base that is within, walking distance essentially from where people live there. And so I'm glad to hear you say that, because, there are folks that don't want to invest in real estate outside their local area. And in your marketplace, living there, owning a home there, and then buying investment property there is one heck of a good way to secure your retirement.
Absolutely. We've seen some investors too, but the majority of the buyers that are out today in this market of Somerset County and Morris County are families looking to upgrade. They have seen that they can buy their dream home now, go direct from their first home to their dream home at a price they never could have dreamed possible 5 years ago.
Well, that's it. Yeah, I mean, people know the prices.
And you compound that with the low interest rates, and where I'm counseling buyers, and they're getting counseling from their investment advisors as well, is now's the time to buy as much real estate as you're going to need, in terms of instead of getting the $600,000 house, go right to the $900,000 house, because by the time you're ready for that $900,000 house, it'll be $1.2 million, and interest rates will be 7.5%.
Right. Well, Eric, thank you for the call. Hey, Eric, what company do you run down there?
Remax Suburban Lifestyles Realty in Burnsville.
Okay, great. So thanks for calling. I appreciate the input.
Good show.
And thank you. And it's one of the reasons I do this show and why I wrote my book, Crash Boom, is because the industry of residential real estate has given itself a reputation that, it's like the banana farmer who always says, eat bananas for breakfast, eat bananas for lunch. We were saying in the industry it's a good time to buy back in 2005. So when Eric tells people it's a good time to buy, people aren't sure if they can believe it. But you can, all right? And that's why I want you to learn this for yourself. I want you to know this so that you're not wondering if you're getting good advice from somebody who might be self-interested. Learn it yourself, and that way you'll know what's right and what's not right. We have another call that I want to take now from Alex in Manhattan. How are you, Alex?
Good afternoon, sir. I'm calling because I'm interested. I'm considering investing in real estate, and I've heard things about Detroit. Most of them bad, and I'm curious because I figure I'm not a big time investor. Maybe invest and wait till the market rises again. Could you give me some advice on that?
Yeah, sure. Well, first thing, Detroit's an interesting question. You do hear, I mean, Detroit is the city that everybody likes to beat up on. And I'm not going to join in with that, but I will tell you that it worries me a little bit. When we analyze markets, we counsel some pretty big investors. We counsel individual investors like yourself, but also some of these big funds that are raising, $100 million and want to buy single-family homes all across the country. And they've engaged us because we have a methodology of evaluating a market that's based upon kind of the way that like Home Depot or Lowe's picks a place to build a gigantic superstore, okay? They don't go build a 400,000 square foot store on a whim. They pick a market to go to based upon a real firm knowledge that people are going to be living there, they're going to have jobs there, they're going to be owning real estate or either to live in or to rent out, and they're going to be wanting to improve those homes, and they need to know that's going to be intact for like 50 years. Otherwise, they're not going to put a stake in the ground to build a store. Same way that a real estate investor should look at it. So when you look at Detroit, the first question is, are people moving there? If they are, why are they? Are jobs moving there? And unfortunately, the answer on the job front is it's a little bit bleak. They've overemphasized the auto industry, and the auto industry is escaping there a little bit. They're building cars in other places. The job, put it this way, if the unions keep having the kind of dysfunctional relationship that they've got right now with the public and with state governments where they're getting kind of blamed for making states go bankrupt, eventually either the state of Michigan is going to go bankrupt or the state of Michigan is going to renegotiate with unions. And I'm worried about the job situation. Like you can trade your Escalade in for like 4 houses in Detroit right now. Okay, they're selling houses. Okay. I'm hearing reports of $10,000, $20,000. They're very, very inexpensive, but it just concerns me because, as cheap as it is, it could come back. But you got to show me some evidence that the jobs are going to be sustained and are going to grow in Detroit if you're going to get my money to invest there.
Well, my reference point is as I'm sitting here in Washington Heights, and I've lived here for 20 years, and what the neighborhood was 10 years ago, what Harlem was 10 years ago, what parts of the Bronx, parts of Brooklyn were. There were no man's land. There was very frightening places to live. And now to see all of the yuppies, the businesses that follow, and I'm 52, so I have seen that progression to where past, let's say, 110th Street was no man's land. So now it's become the new renaissance.
You see ladies with strollers on the street, and that wouldn't have happened 15 years ago. Yeah. So what are you seeing in Detroit that recommends it to you? Like, why are you attracted to Detroit? Do you see evidence of that kind of a turnaround happening?
I figure maybe with immigration patterns, and eventually everybody's afraid to go in the water when somebody gets bit by a shark, using that in reference to the economy. Eventually, somebody in that crowd gets an irresistible urge to go in the water. And then that triggers everybody else going in the water. The thing is to be ahead of that curve. I'm not someone with a lot of money, but and I think it's easy. Of course, the risk is proportionate to the rewards. But you wonder, and he said, the people who were afraid to travel 2 or 3 hours to go to South Jersey, we decided, listen, here's Harlem. In 15 minutes, 20 minutes, I can get on the subway, be at the theaters, be at all of that stuff that a lot of people like. I'm not one of those people, but eventually those people, their urges
I hear you. So, but the idea that here's the one very important fact, and that is that because some parts of New York City turned around doesn't mean that other cities are going to turn around. Don't forget that within a stone's throw of Harlem is the rest of Manhattan. The metro area, 25 million people or something. It's a major hub of commerce and jobs where if we were a city that basically existed because of one industry, okay, Detroit was built around the American auto manufacturing industry and all the derivative spin-off satellite businesses that were swirling around there. Right now, 2 of the 3 American automakers have essentially been taken over by the government. And would they have gone bankrupt had they not been taken over by the government? A lot of people say they would have. It's a scary prospect. So make sure that you dig in a little bit closer to look for evidence, because Detroit's not going away. I'm not saying that. But if there are pockets of Detroit that are, they literally have talked about the idea of bulldozing neighborhoods in Detroit just to eliminate some supply. So they're looking at some pretty stark potential outcomes over there. But make sure you dig in and you find some evidence that kind of turnaround, because they don't happen everywhere. They can happen. They've happened in a lot of places. Like I look at right past across the lake from Detroit is Cleveland, and Cleveland I recommend. And even though Cleveland, the housing market in Cleveland got beat up pretty bad by the decline of the auto industry, because a lot of the Cleveland manufacturing job base was manufacturing things for the car makers, but they weren't making cars. They were making components, door handles, parts. And the medical device industry, the medical instrument industry, has chosen Cleveland as a place to kind of move into, because the factories are there that made door handles. Making a door handle is not that different than making a scalpel, okay? It's kind of a silly analogy, but when you have a factory designed to make cars, it's hard to make anything else in that factory. When you have a factory designed to make door handles, it's easier to repurpose that. And they were able to repurpose factories. They were able to repurpose employees. And so there's an example of a city that is also in some distress home price-wise, but it's turned the corner in terms of a new industry moving in. That's Cleveland. So one of the beautiful things about investing in real estate is that you can do homework. You can learn things that nobody else really knows. And you're correct that a lot of people are running away from Detroit because of all the obvious reasons. I personally give it sort of a mixed grade for the reasons that I've explained, but I would encourage you to do the things that I've been talking about. Put your Home Depot hat on and say, would I open a store in this neighborhood? Are there reasons to be confident in long-term growth of population? If there is, then there are some good buys there. All right?
Very well, sir. Thank you.
All right. Thank you, Alex. I appreciate the call. All right, we're going to go to break. You're listening to Randon Real Estate on 77 WABC. Call us. You'll get on the air in the next segment or two. Number here is 800-848-9222. When I get back, we're going to talk about the government's latest brainstorm on how to solve the housing crisis. Stay with us. Welcome back to Randon Real Estate. My name is Greg Rand. This is 77 WABC, and we're also broadcasting on WABCradio.com. Our number here is 800-848-9222. We want to take your calls. I want to answer your questions about any place in the country. That's my specialty, is digging into different markets and teaching you how to read the tea leaves on what's a good market to invest in and which ones maybe to stay away from. I want to tell you a little bit about some things that we have on our website that I want to direct your attention to. We're doing a survey right now, and I want to invite you to go to OwnAmerica.com, OWN America, as in how awesome is it that you can actually own pieces of the country that you love. Go to OwnAmerica.com, and you'll see on the homepage there's a blog posting that has a survey link. Please take the survey. What we're trying to do here is understand better the nature of the investors that are out there, because, as I mentioned in the previous segment, a lot of people just think that real estate investing is about finding a steal and flipping a property, and they don't realize that there are a lot of people that are quietly securing their retirement. There are people that are taking my advice and buying a small investment property for each of their children's college funds. It's called Have a Kid, Buy a Condo. That's what I did, and it's a really, really great plan, because go to your uncles, your aunts, your parents, your grandparents, everybody who's so happy about little junior or little juniorette before the kid gets an attitude, before the kid's a brat, before the kid grows up. They like them the most when they're really fresh, and that's when you go to them and say, look, I don't want you to help me send this kid to college in 18 years. I want you to help me do it now. Pool your money, buy a small property, and what you've done then is planted a seed, all right? And the beauty of Have a Kid, Buy a Condo is the right way to invest in real estate is to anchor your investment to very, very important, passionate, long-term goals that you have, okay? Having a kid and then having $250,000 to send him to college, either you're going to you have three options. Either you're going to save $1,000 a month forever, and if you do that, you'll have enough money to send him to college, or you're going to wait, and then your life is going to be on hold when that kid goes to college, because you're going to be paying out of your bank account, scrapping money together to write these big checks, or you're going to saddle them with a mountain of debt. So when they get out of college, they have tons of student loans. The fourth option is to buy a very small, inexpensive as you can investment property and let that thing mature as the kid matures. 18 years is a long time. We're going to have a big real estate boom between now and 18 years from now. I promise you that. And so the survey is all about getting information about you, about what your thoughts are on the real estate investment subject. Obviously, it's free. It's anonymous. Go on there, OwnAmerica.com, take the survey, and while you're there, bounce around the site. What you're going to find are some analysis tools, something we call the case study calculator that allows you to punch in numbers on assumptions on a property that you might want to consider investing in, and looking at 30-year projections on how much equity you would build if your assumptions held true, how much cash flow you would generate, and the internal rate of return. Actually looking at, if you bundle together the money you make from appreciation, the equity you build through paying your mortgage down, and the positive cash flow you generate, and you compare that in any given year with how much money you've invested, you can get an internal rate of return, a percentage. And you can see that, people know that real estate builds wealth. They know they don't know how, and they don't know why. But you know what? It's not magic. It's not the tooth fairy. There are combinations of forces, appreciation, amortization, and cash flow that coalesce together to produce fantastic returns. But part of the reason that we don't understand how it exactly works is that we don't have a statement. There's no number that somebody gives us saying your investment property returned you 8.7% last year. The internal rate of return calculator, the case study calculator, gives you that number, and you're going to be amazed when you look and see that a steady, solid, reliable investment like a piece of real estate in a city or a town that you trust is going to produce for you, in a lot of cases, double-digit returns, and in a lot of cases, pushing 15 to 18% annual rates of return because of the combination of low rates, low prices, and upward pressure on rents right now. So play with the toy. That's what it's there for. It's a phenomenal learning tool. If you picked a real property and messed around with this case study calculator, your intuition grows. You begin to see that as you lay down a baseline and see the charts, then you tweak your assumptions. What if it appreciates a little faster than I assumed? And you watch the way that changes the results over 30 years. If you're a real estate junkie like me, this is catnip. You're going to love it. So go to OwnAmerica.com, take the survey, play with the toys, send me an email. We also have a course on there. We have a 4.5-hour investor course that you can take for free. So there's a lot of cool things on the site. Enjoy it. Let me know what you think, and become smarter about this asset class. Because let me tell you, you can get rich. A lot of people do. All right, so we have calls coming in. I'm going to talk a little bit about the government intervention. Then I'll take the calls. Again, the number there is 800-848-9222. But first, let's get into this conversation about what is coming out of Washington now. You might recall back in September or August of last year, the federal government, the U.S. Treasury, put out something called a request for information, okay, an RFI. And the request for information was from private sector investor types to suggest to the government what they could do to convert all these foreclosures that the government now owns because of Fannie Mae, Freddie Mac, and FHA mortgages being defaulted on, and the government takes them back. So they've got all these properties. They want to convert them to rentals. Great idea, okay? But the way these guys in Washington these days operate, you always got to look at it and say, do they really want – I mean, they don't seem to have a lot of faith or respect for the private sector. They seem to have a lot of control and command and control sort of ideas. So I was nervous. We talked about it here, that I'm nervous because I don't trust the kind of solutions they come out with down there. And I know this. I know that the head of the U.S. Department of Housing and Urban Development, that's HUD, okay, the Secretary of HUD is a guy named Sean Donovan. Sean Donovan is a housing advocate. And if you research him, you're going to find that he is really his life is motivated by the idea of affordable housing. He wants to help people be able to afford housing. It's a good thing, okay? But it's how you go about it that can screw up the housing market in a really, really big way. So my concern then, and it's renewed now, because now they're saying they've gotten all this information in, they've made some decisions on how they want to go about this, and they are looking to sell 250,000 single-family homes to a small handful of investors to then convert them into rentals. Now, sounds good so far, right? Here's my problem with it. It sounds as if they're looking to sell to these investors at a deep discount, okay, a deep discount. You don't have to discount the properties if you want them to sell. Foreclosures are selling very, very quickly in the marketplace right now to individual investors, institutional investors. They're jumping on foreclosures when they come on the market. You don't have to discount them. So why are they discounting them? I'm hearing crazy things like 30 cents on the dollar, 50 cents on the dollar. You don't have to do that unless there are strings attached. That's my concern. The strings are, I think, going to be something like you have to convert them to rentals and you have to put them on for under market rents. Okay? So think of this as the new definition of a housing project. All right? We're going to control the rents by selling the properties to investors who I don't even want to know how much money these investors donated to the campaigns of the people in power right now, because I have a feeling you're going to find out that the campaign donors are the ones who are getting the 50% discounts on the government-owned houses. That's also the crony capitalism thing. This smells a little bit like that. But there's no reason to discount them. If you're discounting them, if you go into, say, Phoenix, okay, Phoenix is a market that has lots and lots of foreclosures. Right now, investors are gobbling up the properties in Phoenix. It is actually stabilizing the Phoenix market. And even though rental rates are rising, which HUD doesn't like, okay, they want the rental rates to come down, the way those rental rates are going to come down in the free market is more supply of rentals. Thereby, landlords have to be more competitive. Thereby, there are more options for tenants. Rates come down. That's how this is going to be solved. If the government sells 100,000 houses to a private investor in Phoenix at a deep discount and then ruins the market for rentals by telling them you have to offer it at 50% less than the market rent, what you just did is screwed a whole bunch of individual investors by going in and, in a very clumsy way, oversupplying the market with rentals with rent controls. You spoil the market when you do that. You also will have an impact on stunting the recovery of home prices, because if you can rent really cheap, that's connected to the value of homes. If it costs you twice as much to own the place as it would to rent one just like it, you're going to rent one. It's going to wind up pulling home prices down. So we're going to report this to you every month on the show and tell you what's happening with this. If they set their sights on one or two cities, I'm going to tell you to run away from those cities for the time being because of what I've explained here, that you can – the reasons why places like Phoenix had major declines in home prices was an oversupply of newly built homes, okay? If you go and do the same thing with an oversupply of new rentals, you're going to spoil the market. So if you're on the line right now, stay with us. I'm going to come right back and take your calls. Rand on Real Estate, back in a moment. Welcome back to Rand on Real Estate. I'm Greg Rand, your host on 77 WABC and WABCRadio.com. We're going to go to the phones now. We've got Nick from Woodbridge. How you doing, Nick?
I'm doing very well, thank you. I'm enjoying the show.
Thank you.
I'm calling because, we've had a place down at Daytona Beach for several years, and I'm thinking about looking at some condos down there because the place we have is RP. We don't rent it out right now because we're not there all the time. We live here in New Jersey. And eventually, somewhere down the line, we'd like to do the snowbird thing,
Right.
So I'm thinking I could probably rent that place out to a dentist or something like that at some point. And I'm looking to maybe pick up a small condo down there, maybe something on the beach, something like that. I'm wondering what your prospects, what your vision of that area is.
Okay, I love the whole state of Florida. And Daytona Beach, I'm looking at a chart right now of Daytona Beach home prices. And the values in Daytona Beach, if I can describe this to you, picture the top of a mountain. It goes straight up, it peaks, it comes straight back down again. Prices there 10 years ago were about average price of a sold property was about $90,000. It went up as high as $200,000. It's back down to $90,000. That is not the free market at work. That is an explainable, isolated, and temporary overcorrection that I think the market in Daytona Beach is probably more like 120, 130, but it's only down where it is right now because of things that we all understand. I love Florida, and Daytona is a really, it's on the water there. I love it because the migration patterns that have been growing Florida's population for the last 30 years are not slowing down because of this recession at all. In fact, they're accelerating. People are leaving expensive places like the New York area, and they're filing down to Florida because the low cost of living, the no income tax, state income tax, and the climate and the lifestyle and everything else. So I love it. I would definitely do that if I were you. And the fact that you already know the place and you already own property there, Nick, means that you're not going to be surprised by waking up one day and finding out they built a sewer treatment plant across the street from your property. You go down there, and so you're going to visit your properties. You're going to shake hands with your tenants. I think it's a great play, and I would also suggest that what you do is each property you buy, assign a purpose to it. I talked earlier about have a kid buy a condo. Assign that I'm going to buy this condo, and when I retire, that's going to be a boat. or when I retire, that's going to be a car collection, or I'm just going to throw it on top of my existing property and buy a better place, a bigger place to retire to. Assign a purpose to it, yeah. So I love it. Thank you very much for the call. We got a lot of callers on hold and only a couple of minutes, so I'm going to jump to, how about JJ in Rockland County? How you doing, JJ?
Hi.
So
I'm
your question?
Your show. I see that there's a house. I know the house across the street from me is up for auction, but I don't know anything about that process. The quick rundown on what I should do. I have a phone number and a website to check, but I haven't had time to look into that yet.
Yeah, well, the process, it depends. The auction process is different town by town, but it's pretty straightforward. They are obligated, if it's a foreclosure auction, they're obligated to give notice, and they're obligated to have the auction, and that property is very, very likely to sell. The only thing that can get in the way of it actually selling at the auction is if the bank comes along, somebody comes along and buys the note from the bank and then takes it off the auction. But that is not as common as it used to be. I love the idea of buying a house across the street from where you live, though, JJ. And the reason is that a lot of people – would this be your first investment?
No.
Okay. Do you own property in Rockland County? I grew up there, by the way. I love Rockland.
Yes, I do.
Okay, so you're not too intimidated by being a landlord then. You already are one.
No, not at all. Well, okay. I'm looking to help my son buy this.
Okay. I love it because you look at it every day, okay?
Yes.
The idea that your tenant is going to pay the rent because he's got to wave to you across the street every morning. He's not going to stiff you. It's very unlikely he's going to stiff you. And, managing a property across the street from your own property is like instead of having a 4-bedroom, 2-bath, you've got an 8-bedroom, 4-bath to maintain now, 2 lawns to cut, 2 kitchens to keep appliances working in. It becomes really a piece of cake, and the idea that things could go bad are so mitigated because it's right there in front of your face. Yeah. So I love it. I would definitely make that phone call. Don't hesitate. Find the time. During halftime of the Giant game today, find the time, get on that thing, and get to that auction because it's a great starter investment because it's for your son because it's right there.
Yes, very good.
All right, thanks for the call.
Anything I should look out for, anything that sticks out in starting an auction process?
Nah, you know what? You should get a real estate attorney before you get engaged in this thing. Make the phone call, check out the website. But if you want to email me, email greg@ownamerica.com. I can refer you to somebody in Rockland who does this. And you can have a lawyer at the transaction anyway. You might as well have somebody who's got experience with this, and they're the ones that can best. There's not that much you have to worry about, but it's nice to have some experience on your side. All right, thank you, JJ, for the call. Got time for a couple more. How about Ruth in New York? How you doing, Ruth?
Hello.
Hi. Thanks for holding. How are you?
Thank you very much. Fine, thank you. And you?
I'm doing terrific. What do you have on your mind there?
I have a house in New York, in Brooklyn, as a matter of fact, and it's in an excellent neighborhood. I am thinking I want to sell it, and I want to move up a little further. I'd like to move and get an apartment, possibly a co-op or a condo in Westchester. And I can get a lot of money for my house, and I'm just wondering, is it the right thing to do today to buy or to rent something? I don't the house I don't want anymore.
It's a good question. I was going to ask you if there's any chance you'd keep the house because I hate selling property. I like accumulating.
No.
It's the wrong time. No. Okay, you don't want the house. So sell the house.
It's going to be too far for me. If I'm up in Westchester, it's going to be too far to come back here.
If you know you want to, and I'm guessing you have kids in Westchester?
Yes.
Okay. Buy the place in Westchester. If you want to rent for a year and then buy because it's just, your money. It depends on if you need the money to live on, in which case renting is okay. But you're talking to the guy that runs a company called OwnAmerica. It's just, owning is it's kind of my religion. So I love the idea of you, if you know you want to end up there and you're really comfortable with the place where you're going to go, buy it. That way you own it. And you probably, if you're buying a condo and selling a house in New York City, you're probably going to have money left over.
Oh, absolutely. That's what I mean. I will. I'm not going to. I have enough money to live on besides. But I'm just wondering if buying a good idea.
Buying is good. This is a great time to be buying. So Ruth, I would. You're an owner. That's what you've always done. I would definitely buy that place. And if you want to email me, I can put you in the hands of a capable real estate professional up there. My email address is greg@ownamerica.com. Please do, and I can help you out. Thank you for the call. I have time, I think, for one more if we keep it quick.
A 30-second drive-by.
Okay. Fred from Union, how are you?
Hey, hi, Greg. Great show.
Thank you.
I got a quick question. I have a house I put a lot of money into about for 8 years now, and but half my neighborhood has gone rental. And I was wondering, I know home prices have gone down anyway, how that affects my value.
I don't think that it affects your value real dramatically. You know, I mean, if the character of the renters coming in are going to be,
some of them are not so nice. I don't know.
Not so nice.
You know what I mean?
Yeah, it really shouldn't have. If a neighborhood goes dramatically rental, that can change the character of the neighborhood. If the owners don't keep the properties up like they should, it can change the character of the neighborhood. It's really hard to know what kind of effect it's going to have. But if you move, you might consider hanging on to it, because if the rentals are doing good in that neighborhood, you could become a landlord there and move someplace else where there's less rentals. So, and I got to wrap it up, Fred. I'm sorry I left you to the end here, but we're at the end of our time. So if you have any further questions, feel free to email me at greg@OwnAmerica.com. I'll get right back to you. Thank you so much for listening. You've been listening to Rand on Real Estate on 77 WABC. This hour is brought to you by Own America. That's my company. What we do is help people build wealth and create wealth using residential real estate as the vehicle. So come and see us at OwnAmerica.com. Write me at greg@OwnAmerica.com. And enjoy the rest of your weekend. Thank you so much for listening.